The US dollar index is testing the lowest levels of October. Investors are getting more convinced that the recent sell-off of the greenback destroyed its bullish momentum. Experts warn about the downtrend of the US currency in the nearest weeks. The latest developments boosted the appetite for risk. On the plus side, traders cheered better than expected US nonfarm payrolls because the data dispelled fears about the looming recession in the US economy. The Federal Reserve has cut the funds rate and continues buying bonds with short-term maturity for the balance sheet. On the flip side, the greenback was weighed down by a soft manufacturing survey. Besides, Washington assures the market that the first phase trade deal will be settled in mid-November. Such news is always bearish for the US currency. The US dollar index is firmly stuck at the level above 97. It opened the New York trade at near 97.31 without a clear trend. Both fundamentals and technical analysis do not signal strength of the US currency. Its index closed below the 200-day moving average, which acted as the key support level in mid-October. As a rule, a decline below this level is followed by a protracted bearish trend. The US dollar has been affected by the stronger euro. The bulls aim to push the euro to 1.12 against the US dollar. Despite a minor dip during the European trade, the euro-dollar pair remains at the elevated level. The euro bulls anticipate that the White House will cancel the imposition of tariffs on imported cars from the eurozone. Traders speculating on the Canadian dollar await for economic data, which will either confirm or reject the Bank of Canada's cautious outlook for the domestic economic growth. This week, the economic calendar contains trade balance data, IV PMI, and a batch of employment data. The consensus suggests that all figures will undershoot projected scores. The US dollar versus the Canadian dollar pair is trading at about 1.3155. In fact, the loonie should be trading at lower levels, but it is resilient amid the weaker American rival. Today, traders will get to know factory orders in the US. However, no other important data from the US is due later this week. The dynamic of the US dollar is going to be subdued because the Federal Reserve is not poised to cut interest rates until the year end. That was all for now. Thank you for watching and see you back tomorrow.